tous, vous m'entendez bien?
Hello everybody, do you hear me well? Okay.
And everyone, it's a real pleasure to be here today. My name is Zineb SQALLI. I am a managing director and partner at BCG, and I am delighted to open the Women in Finance panel of this edition of AFIS. The topic of today is going to be around innovative finance and how can innovative finance foster women entrepreneurship. I will be giving a short presentation just to set the stage before a distinguished set of panelists that Anjani will be presenting and moderating in a minute. So over the past 15 years, I have been working with, on the one hand, financial institutions to tackle their biggest strategic challenges. But I've also been leading BCG's global work on women's economic inclusion, and the topic that we are discussing today is something that I hold very close to my heart because it sits at the intersection of these two hats. As I mentioned earlier, this session is about unlocking a massive potential for African economies through a better support of African women entrepreneurs through innovative financing vehicles. Now, I have slides, I have numbers, I have frameworks, but I just thought I would introduce this conversation with a story. That's the story of Aminata. Aminata is a 33-year-old from Dakar, Senegal. She studied English at Sheikh Anta Diop University and became an English teacher. After 4 years as a teacher, she wanted to expand her impact beyond the classroom. And so she started EduLingui, an edtech platform that is offering digital tools to improve language training, language education, especially in underserved areas. And even if she believed a lot in her projects, she very quickly felt stuck. She had some savings and a small loan from her mother, but that's not enough to grow. Banks won't let her. Her house isn't in her name, and she has no collateral to offer. She does not know any women like her who have done this before, and she has 2 kids, so childcare is also another challenge. And despite her husband's moral support, she feels stuck. And this is where we begin today's conversation. How can we support women like Aminata to reach their full potential? You might be thinking, yeah, but Aminata is not really representative of African women entrepreneurs. She's educated, she lives in a city, and she's building a tech-driven business. And you would be right. But I still chose her story to open today's panel for 2 reasons. Number one, it's to show that even well-educated, even visionary women actually struggle to secure the financing. And second, and I would say more importantly, to challenge the narrative around African entrepreneurs. When people hear African women entrepreneurs, they think rural women seeking ways to survive or feed their children. And of course, those exist and those need support. Many others are also ambitious women willing to build unicorns. And these are the ones who also need financing and innovative financing to transform their communities and countries. So beyond Aminata, let's look at the broader picture to understand why these barriers persist and how widespread the problem is. These are the numbers I was talking about. So Africa has the highest rate of entrepreneurship or of women entrepreneurs in the world. Almost a quarter of African women are entrepreneurs. In sub-Saharan Africa, this number is even 45%, so it is much higher than this. And yet, women-led businesses are underfinanced, undercompensated, and subscaled. Underfinanced because data is not perfect, but it is estimated that women-led businesses get 6 times less funding than businesses that are built by men. And they're compensated because when women act as owners of their business, they earn 34% less money than men owning businesses, and subscaled because they remain, let's say, at a small range. And even if 24% of African women are entrepreneurs, businesses that are led by women are only 7% of large businesses, meaning more than 500 employees. Reasons behind this are multiple. They're also intertwined. Some are common to all working women, not just entrepreneurs. So that's social norms, that's childcare, that's security, that's education, that's access to transport. But others are really specific to entrepreneurship, and that's what we are discussing today. Many women simply don't qualify for loans. They lack collateral. They face high interest rates, and they operate informal businesses that traditional commercial banks do not recognize. And that's why there is also an interesting phenomenon. And that's what I call grantrepreneurs. Because even when women get access to funding, a lot of this funding is actually grants. The numbers you see here, the 52% at the bottom of the page, is the percentage of funding that women are getting in the tech sector. Now, we chose tech sector because it's very well documented, let's say much better documented than women entrepreneurship in general, but also because that's the sector where you might be thinking commercial investors or mainstream investors would be interested in. And yet, even in the tech sector, 52% of women's funding is coming from grants. And it's not to say that grants are not helpful. Of course they are. But they don't necessarily help women scale. They don't necessarily give them access to commercial networks or provide them with long-term capabilities. So this is a massive opportunity. But it's not just a massive opportunity for women. It's a massive opportunity for our economies. We estimate that the inclusion of women entrepreneurs could generate as much as 625 billion to African GDP in 2024. It seems a lot. It is a lot. It's 30% of the GDP of the whole of sub-Saharan Africa. So we're not really here to help women. Or if we are here to help women, we are here to help women help the African economies and generate even more GDP and richness for all of us. And it's not just about GDP, because women entrepreneurs also drive a ripple effect on families, on communities, and even on the planet. Studies have shown that 70% of women's income is reinvested in their families. It's reinvested on their education, on their healthcare, on their well-being, compared to 35% of men. Businesses created by women employ 75% women in return, compared to 20% of women employed in businesses founded by men. And women entrepreneurs are also more inclined to build sustainable businesses, or businesses that would account for environmental impact from the start. So the question is, given all of this potential, how can the financial ecosystem harness this potential? Initiatives are multiple, and we will talk about this at the panel. They don't only rely on financial players, but these have a key role to play, and promising innovations have already taken place in Africa, and that's what I will talk about in a minute, but also elsewhere in the world that Africa can benefit from and that can clearly move the needle. Let's start with gender bonds. So gender bonds are sustainable debt instruments that channel capital into projects that advance gender equality and empower women. They are typically issued by DFIs, by governments, but more and more they are being issued by corporates and by banks, and they help enable large-scale funding for initiatives that directly benefit women entrepreneurs. These bonds are growing rapidly, which you can see on the right-hand side of the slide. 86%, it's growing 86% annually, with $14.5 billion in assets under management globally. However, Africa is lagging behind. Out of 160 gender bonds worldwide, only 5 are in Africa. And this means that we are missing out on an important transformative tool. A great example of their potential comes from Colombia, where Banco da Vivienda issued a gender bond in 2020. This bond was structured and subscribed by Inter-American Development Bank, IDB, and this bond has provided capital to 12,000 women-led SMEs and facilitated access to social housing for 84,000 low-income women. There have been gender bonds issued in Africa, but they remain isolated initiatives far from the scale that is needed to create systemic change. Scaling this tool across Africa can unlock significant potential for women entrepreneurs and close the funding gap. I will talk in a minute as to how can we reach a larger scale in Africa. The other initiative or the other opportunity I wanted to share with you is collateral digitization. So what is it about? Digitizing collateral means using non-physical assets as security for loans. So this can be digital transaction history, it can be mobile money records, it can be e-commerce sales data, for example. And what amplifies the effect of these digitized collaterals is the ability of a bank to accept non-traditional forms of collateral, meaning something else than real estate, for example. And this is the place where Africa has actually been pioneering. Out of the 50 countries that allow non-traditional forms of collateral, 15 countries are in Africa. And this didn't happen yesterday. Actually, in Ghana, already 15 years ago, the Bank of Ghana established Africa's first collateral registry in 2010, enabling borrowers to use not just land or real estate, but also movable assets. So that's inventory, for example, as collateral. And the results of this initiative has actually been very promising. 7 years later, women entrepreneurs accounted for 40% of all registrations, and they have secured over $100 million of financing for SMEs. And digitizing the collateral takes this concept even further, because it does alleviate some of the barriers that women are facing to secure these fundings. And in Kenya, for example, M-Shwari uses Safaricom data to assess credit scores, offering loans without traditional collateral. Many other examples exist. In Nigeria, for example, Asset Bank analyzes bank account transaction to provide cash flow-based loans for SMEs. Digitizing the collateral reduces friction, it cuts down administrative hurdles, and opens up financing to millions of customers, not just women, but all of those who lack formal property ownership. So the question becomes, and to wrap us up and give room for the panel, how can we turn these innovations, these isolated innovations, into something scalable? And what is it that is needed to do that? First of all, this is not a one person's task. It takes the whole financial ecosystem and even beyond the financial ecosystem to move the needle. If we take again the example of gender bonds, As we saw through the example in Colombia, these innovative instruments can mobilize massive capital, but they cannot scale on their own. Governments must lead the way by establishing the legal and the regulatory framework that are needed for these bonds to thrive. They can also create environments that attract investors, which encourages investments in sustainability-linked bonds with favorable tax treatments. But DFIs, and we will talk about that during the panel, DFIs can also act like catalysts because these vehicles are still perceived as new, maybe too risky. And so DFIs can play a role in building the confidence in the market, in paving the way for others to follow. And once the market is structured, financial institutions can also scale all of these initiatives to issue gender bonds to fuel women entrepreneurs and broaden their base. So it requires a coordinated ecosystem to really transform this opportunity. For digitizing collateral, for example, a similar convening is needed. Again, governments play a central role in a center stage in allowing the creation of these movable collateral registries, like the example I mentioned earlier in Ghana, allowing women to leverage assets like livestock, inventory, etc., or even their digital data. But again, they cannot do this alone. DFIs can also have a significant supporting role to partner with governments to build these frameworks and to collaborate with financial institutions to develop tech-enabled solutions. And to conclude, I just would like to address the elephant in the room. We have been having these conversations for a long time now. These vehicles will only scale if banks and other financial players, economic players, see what's in it for them. If they see women entrepreneurs as a profitable segment, if they see these vehicles as a source of competitive advantage, which they are, that's the real game changer. That's the real battle, and I believe this is what the panel will be addressing. Gender bonds attract ESG investors. They help banks tap into new sources of funding. Women entrepreneurs are good borrowers and loyal customers. Digitized collateral reduce costs to serve and streamlines credit process, not just for women, while allowing to address new sectors, new clients, and diversify revenue sources. And with that, I would like to hand it over to you, Anjani, and to our distinguished panelists to shed more light on this critical topic. Thank you.
Thank you, Zineb. That was fantastic and really does help set the stage here for what we're about to discuss. I'm Anjani TRIVEDI. I'm a global business correspondent for the Economist magazine. I would like to introduce our fantastic panel. Speaking of ecosystems, we literally have a representative from each part, so hopefully this will be a very fruitful discussion. I'd like to start with Gwendoline ABUNAW from Ecobank. Please just come on up and grab a seat. Hadiza AMBURSA from Axis Bank. Nathalie AKON from the IFC. And Ilham LAHLOU from SanlamAllianz. Thank you all for being here today. I'm really looking forward to this conversation. You know, Zineb has done a wonderful job at kind of giving us exactly what's needed, what the challenges are, challenging the narrative, the scaling barriers, the building long-term capabilities. So we've seen all of that. You know, we want to talk about what are the solutions, innovative financial solutions, whether it's gender bonds or other financial products that can be used to unlock this potential, not to just help African women, as Zineb rightly pointed out, but to make them as a key player in African economies and really boost growth. I want to start with you, Nathalie, because the IFC does so much work around this, has been a kind of a lead driver, I guess, on gender bonds and other financial innovations. I guess we should start more broadly and kind of talk about how financial institutions can use innovative financing services to scale up financial products for women in the continent.
Thank you. Can you hear me?
Yes.
Yeah. Thank you, first of all, for this question and for convening this panel, this important discussion. And I hope that the next time we'll see more male in this conversation, because as long as we continue to try to convince ourselves and talk about it among ourselves, I'm not bringing the other out. Before I delve into your question, I want again to try to make the case for it. Zineb elaborated it quite eloquently, but the reality is that if financial institutions are not tapping into the great potential of women entrepreneurs, they're just leaving money on the table. That's what it is. We are beyond its right to do, or it's about a real economic opportunity. The challenge is that when you look at the work that has been done to advance financial inclusion, we see a lot of progress around micro and small entrepreneur. And I believe that new tools like AI will really help us to leap and increase financing in that segment. We know that we can now model. There was a point around women being more loyal as a customer, being better borrower in terms of risk, etc. AI will allow us to collect more and more data and model women as a very profitable and credible customer. So I think we will see an acceleration on that segment. I'm not talking about the women that are already the large entrepreneurs, because they have access to funding, and actually there's a lot of attraction and competition at that level. I think where we are missing really the opportunity is the missing middle. To the example of the entrepreneur that was quoted at the beginning, is those women that, and we have one in the room here, fintechs that have started, are educated, have a business that has demonstrated, a model that has been demonstrated, but can't raise the $1 million, or between the $500,000 and the $1 million. And there, the greatest barriers are those investor bias that still persist. So IFC launched a program last year that we call She Wins Africa, replicating on She Wins Arabia. And what we do in this program is that we invest into building the capacity, obviously, of those women to pitch with different investors, but we do a lot of work on the investors as well, in terms of addressing the bias that are typical when they assess women programs. So just wanted to lay this ground, because at the end of the day, it will require addressing those bias. Now, when it comes to the gender bonds, what we have appreciate is that the challenge for scale are really three reasons. The first one, and the point was made, was data. Yeah. Evidence, data, benchmark, to be able to really understand how to design, model those bonds. The second is around the capacity. And there I want to talk about the capacity of both the issuer and the investors. We need to invest for them to understand the product, to understand how to use the product. The third level of challenge that we're facing is the problem of scalability, especially when it's about crossing different markets and different countries. Finding a model that will allow to achieve the scales has been also a challenge. So what does IFC do? We act as a market builder, being a first issuer in a number of those markets. And we've done that in many countries around the world. In Africa, we have supported NMB Bank, for example, to issue the first gender bond on the continent. We also support the collection of data to inform and be able, but we also ask as an investor to make the market move.
Thank you for that. And we will, you raised two very good points around, the the perceived financial returns and educating investors around this and on data. And I'd love to come back to that. But before we get further into that, Hadiza, one of the points that Nathalie raised was around commercial institutions. How do you get commercial institutions to think about products like these that are, we've laid out a very strong case here for why this is needed. But how do commercial financial institutions think about this? And from your perspective, how does a kind of a financial product, whether that's gender bonds or one that is targeted to women, how does that get built and scaled?
So thank you for the question, Anjani. So I think that commercial banks are uniquely positioned because we work locally, so we understand the markets that we're in and we understand the challenges that the women face. But there's still that problem, right, of how do you get the investors on the table, which Gwen spoke about. We were talking earlier just before this about how it's very difficult. So a lot of people who want to invest or who understand the gender bonds and want to invest have foreign currency. We can't afford to lend to them in foreign currency just because most of the countries that we're in have a lot of volatility around the currency. You cannot lend money to small businesses in dollars and then they're making money in naira. They might not be able to pay when it's time to pay back. So we have to find a way to educate our local investors to understand why these bonds are important so they can invest in them locally, and again, you can't lend them at the local lending rates. You can't raise monies at the local lending rates. So there has to be a lot of education for the investors so they understand the long-term value, and maybe, I guess, by showing a bit more impact, just like Zineb had in her presentation, about how there's sort of like a ripple effect, not just immediate returns on your investment, but that there's a ripple effect. The families benefit, everybody benefits when the women have access to funds. So I guess we can help with the data process in terms of providing data from what we understand, and we can help with investing in getting the investors to understand what the value is. And then, of course, once all that is in place, we can then issue the bonds. I guess we can also act as guarantors, right? Because, again, we understand the market. So if people are willing to invest and would be a bit more comfortable when a bank gives a guarantee, we can do that as well.
Thank you. And one of the things you had told me previously is that Access Bank actually has 12 gender desks.
So we have a women initiative, right? So we have a desk focused on women. And what we do is not just provide funding, which is just one of the things we do, but we also do capacity building. We help with other things like setting up your business, making sure you have the right registration, you pay your taxes, you do the right bookkeeping. And we have this in 12 of the countries in Africa that we operate in right now. So I think that has also helped, because in the beginning we started off sort of like getting the funding and not being able to apply it. But now that we've been able to sort of like get the structure in place, we're able to provide more funding. I think since we started this W initiative, we've probably gotten access in both cash and guarantees to about over $1 billion actually, which we've on-lent out to the businesses.
Great, thank you. Gwen, you also sit on the commercial bank side. And, I think Hadiza has laid out kind of how banks can participate in this ecosystem effectively. How can, what is it that will change the mindset of investors from a commercial bank's perspective that would, help scale, or even make financial products that are focused on women or that target women real kind of investment, viable investments that they can think about?
Thank you very much. Before I go straight into your question about what we can do for investors to be more interested, I think it's important to share what has been done already from a perspective of Ecobank. The mission and vision of Ecobank Group is actually to participate in the economic development and financial integration of the economies in which we operate. And as you know, at least 80% of SMEs are run by women. The issue is that they are normally in the informal sector. So in 2019, we launched the Elevate program in the 33 operating affiliates of our group. And so far, we have over 80,000 women on this program and have been able to finance them with over $300 million. In addition to that, we have been able to do a lot of digital and financial literacy programs because that is also an issue. The difficulties that we have to scale is because sometimes the women are not aware of the possibilities and do not have access to this ecosystem. Secondly, we have also been able to partner, as we were talking about, with partners like the African Guarantee Fund to come up with guarantees that can also be on-lend to these ladies. So we have done over 300 million of a convention with the African Guarantee Fund to that effect. In addition to that, we have at affiliate levels an initiative, for example, done by Ecobank Zimbabwe, where they were able to put revolving credit facilities for women in the community. So something that started off with 55,000 women, by the time we could end the year, we're at over 100,000 women involved in this revolving credit program. So I'm setting the stage for that to answer your question on how can we get investors to be more interested in the gender bond issue. You know, I think we have to change the narrative. The narrative is always around supporting women as a good to do. But actually, investing in a gender bond for women is as profitable. You have enough return on investment like you would for any other bond. So I think what is critical is we all have to change the narrative. It's a collaborative effect, the commercial banks, the DFIs, the governments, but the narrative should change. It should not be we are doing it to help, but they are actually bonds that can give very good return on investment. Secondly, I think Zineb talked about it in her presentation where she said governments have to be involved, and they can be involved by giving tax incentives for those who are going to invest in those gender bonds. Because if they gave tax relief for investors in the gender bonds, it could also be more attractive. We can also be a bit more innovative as to the way we structure these gender bonds, because if we structure them in the, I would say, in the standard sense of the word, it might not be as attractive as investors would like. For example, now it is good to go into sustainability. It is good to go into impact investing. So when we are talking about the structure, we should put that out in front. Those who want to be part of impact investing should be able to invest in gender bonds. So if we change the narrative around how these gender bonds are being deployed or how they are being sold in the market, I think there will be more interest. And we really have to be very intentional about the marketability. Because, you know, normally when you're doing a bond issue, you would do a roadshow. And you're doing a roadshow to other financial investors that already know about the typical government bonds. But now when we're talking about gender-based bonds or gender bonds, the marketing approach and the communication has to change. Because on one end, you're educating the population about what is happening, about the impact it would have, about the impact, you know, on the ECG and all of that it will have. But at the same time, you have to also educate them about the return on investments on these bonds. So the marketing for gender bonds cannot be the same like the marketing for, I would call, in quotes, regular bonds. So I think if we put all of these elements together, all of these initiatives together, we can better sell gender bonds to potential investors. But I think we just have to start by changing the narrative around it.
Absolutely, and I think, you know, especially in the current environment where, you know, climate change is all the rage, and, you know, if we put a bigger umbrella around it that kind of focuses on sustainability, on, you know, even if, you know, just the way green bonds are sold, if these are sold as more kind of commercial products effectively. Ilham, now you're on the other side of things as an insurer effectively. How do you think products like this play in the eyes of investors? You know, how do commercial investors think about these, and how would, you know, the prospects of, there's of course the issue of market depth and so on and so forth, but in a kind of nascent market that's really opening up, how would you think about it?
Thank you very much. Insurers are, of course, parts of the financial institutions, and I'm sure that they can do a lot for gender bonds, for the question of women in general. They can act at different levels because they have the ability to. And I will focus maybe on two levels. The first one is as investors. Insurance companies are big investors in the market. And as it was just said, investors are looking for profitability, are looking for return on capital. And it was shown with more and more evidence through many studies that gender bonds or investments in women activities are giving more interest and more financial returns than others. This is based on studies that are very serious, that when we invest in companies where women are on executive committees, are on boards, or are funding, the level of return of investment is higher than if it's men. So this is something which is very important. When an investor gives its money, it's to have return. And when we are talking about investing on gender bonds, we are saying for the investor that you can have more return on investment. And I can give an example on Asia, when a bank issue gender bonds, and an insurance company, a Japan company, insurance, buy all the gender bonds because they believe that the return on equity is more interesting. This is the first level. Insurance company acting as investors. The second level is insurers acting as insurers, having products and getting premiums. And for this, I believe that we need, as insurers, to have specific products for women. Stopping having just generic products that working for everybody, because women have specific needs, are evolving in specific conditions, they have a specific culture, so the products have to be also designed for them. The way to distribute the products has to be designed for them. Where and when, it's very important to design it for them. And I think really that if we design more products for women, we can enhance the capacity of women. So we can enhance the capacity of, we can enhance the penetration rate. And a global study that has been done by Swiss Re Institute shows that if we have more equity on workplace, we can have more revenue globally. And if we have more revenue, we can have more penetration, insurance penetration, and we can enhance the premium that is collected by insurance companies, which will be good for all, for everyone, and also for the insurance. So very, very important for me to say that insurance companies can do a lot of things for their own benefit, among doing it for the social interest for women.
Absolutely, and I think in that, you know, on the second point that you make, insurance, by creating insurance products or by being insurers, you also end up, you know, helping reduce the risk in these situations for investors when they know that these kind of solutions exist to kind of create an ecosystem around financial products that are targeted at women or for women and women businesses. Nathalie, one of the things that you brought up earlier was a scale issue, right? And we talked about returns, and we'll get into data shortly. But how do you think about the challenge in increasing supply of these bonds, right? How do you incentivize or make the case for gender bonds or for innovative financial products that are easier to do? For one, yes, as Gwen pointed out, changing the narrative. But what else needs to happen? How do we see Africa go from 5 gender bonds to however many are being issued in Europe, for example?
I think the case has to be made in face of an opportunity. And I think that that's really what we're trying to do, building the case to demonstrate how much could be, what is the profit, the profitability of the proposition. So for me, that's what it is, really investing into data to reveal the size of the opportunity for the financial institution. The other point that I would like to make is that we have to continue look at the woman entrepreneur in a holistic way, because this is how also you continue to make the case for the potential of this woman entrepreneur. Because when I talk to a number of them, yes, capital and access to capital is an issue. Capacity, yes, we keep talking about capacity, but in some instances, many of them are telling me, you know, I have been sent to so many capacity building programs. Now what I need is really the money to scale my enterprise. But the other bigger gap that is sometimes overlooked is the market access, the integration in those value chain of large corporates. We've run a program in Kenya called Sourcing to Equal, where we've bring 10 companies from the real sector that are making some commitment in terms of the diversification of their value chain. And this has resulted in women entrepreneurs having access to 100 corporate bids. Yes, it's a small scale, but I think that this kind of program have to be put in place in combination with the programs around the allocation of capital. Otherwise, we will not really unleashing the full potential of those
and giving them an avenue to actually create product. Or Hadiza, on that point, what do you see as the biggest barriers from the commercial side of it? Is it a regulatory barrier? Is it a cultural barrier? Is it access to capital? You know, is it, as you had mentioned earlier when we were speaking, is it an issue about where the money is raised, where the rates, you know, what kind of rates are you giving these loans at, and what's really a feasible product here?
I think it's everything, right? It's a little bit of everything. There's a lack of knowledge or understanding of the gender bonds, because in Africa they're pretty new. Not a lot of people know much about them. There's the lack of understanding of the impact of doing it, so there might have to be a lot more studies on what the impact is. There's also, I think, maybe the use of the funds when raised. So yes, I know that there are people who've had a lot of capacity building and no funds, people who have funds and no capacity building, but there just has to be a way for it to not just be about the small and medium businesses or the micro businesses. I believe there can be impact in other parts of the economy, just in supporting gender. And we were talking about it before we came on the panel, and IFC said they'd done something like that already, wherein you're providing funds to structured companies, but encouraging them to hire more women and encouraging more diversity in the workplace. That also has an impact, and if you can show that impact, I'm sure there'll be investors. So it really is just a little bit of everything, and mostly to do with educating the people about what's in it for them, why you should invest, the profitability, the impact, and generally making life better for others.
Thank you. Gwen, similar question for you, you know, from the commercial bank perspective. How do, you know, we talk a lot about the various things that need to be done, but what are specific strategies that you think that can work? You know, we've talked a lot about the different components, different stakeholders, but what actually works, right? Because we're not I mean, Africa is one continent, but there's several countries. What are specific country-level strategies that can, you know, can you take a targeted approach in these cases?
Thank you. You know, we mentioned in the beginning that this is a collaborative approach. So we have a lot of stakeholders that have to participate to make it work. So in terms of strategy, I think we have all illustrated that the commercial banks have been involved by coming up with programs and continue to come up with programs and services that can help the women get to the level that they want to get to. But on the other hand, I think the governments have a very key part to play, because it has to also be an intentional initiative from their end by putting it in the national strategies. We have seen some countries that have put it as a requirement when a company is being opened, the percentage of women that have to be on boards. We have seen that there are tax relief for certain industries that are focused on women. So I think governments have to continually put it on their country strategies to make it a reality. We also have to learn from the lessons of those who have done it in other countries. Yes, globally, in international markets, there have been gender bonds, and we have been able to see the advantages and the disadvantages. We have seen now in Morocco, I think a gender bond was launched. In South Africa, a gender bond was launched. And I think Ecobank, we are going to launch one next year. We are going to launch a gender bond as a corporation. And I think IFC mentioned the same about what they're doing. But then now, what lessons have we learned? Because we have to keep adjusting ourselves as we go along. We have to be able to leverage from the lessons that others have seen when they launched it so that we can adjust our frameworks. We are coming up with a framework that is going to be launched next year. We should not be able to make the same mistakes that others have made in the past. We have to leverage on partnerships and collaborations because they are institutions and organizations that are really strong and have the expertise on gender-based initiatives. So we should leverage on that. A cooperative or a corporation should not go out alone because they are the issuer of the bond, but they should leverage on partnerships and collaborations. And again, we have to still continue with targeted data collection because right now, most people do initiatives based on hearsay or based on what they think is good to do. But we are still short on data collection that are specific to women. And women in what areas? Because a woman, like you mentioned, I think we had the case study of the young lady in Senegal, has different needs from a lady in a rural town that is doing maybe farming at a certain level and low-scale transformation of the raw material. So we have to be very intentional and precise about the data that is being collected, because if we don't, we'll continue to have generic products that are not fit for purpose of the different women in need. And then lastly, I still insist on the marketing and communication around it, because if we don't have specified marketing and communication around what gender financing is about, what gender bonds is about, we are going to remain on that high level of bonds in general, and we might not be able to get investors to go in the direction that we would like to go to actually scale. So intentionality amongst all the stakeholders and a collaborative approach is really necessary for us to be able to innovate and go to the next level.
I want to follow up on that point because as you were talking about this, I was thinking, you know, even in Europe, when we think about all the chatter around sustainability, ESG, that in a way guided investors towards these, right? It was a regulatory effort, much like that's happened on, you know, you name it, on emissions, on this, on that, everything. There's a top-down regulatory effort, and then people have to get on board. Yeah. Does that happen right now? Is that happening? Do you see any of it in your space?
Yes, I think it's happening. Like I mentioned at Ecobank, we not only have a program, but we continue to come up with products and services to match. I'll give a simple example. We're talking this morning about the African Free Trade Zone, you know, and that is at a large scale. At Ecobank, we have our single trade hub. It's a platform that allows small and medium-sized enterprises to trade or to know who wants to buy their product from different countries. So this is an initiative at our level where we did not wait for a government, we didn't wait for a big regional act, we just did an initiative because we saw the need. You have a lady in Ghana who is doing shea butter, and she wants to have many more people to export to, but she might not have the means to be able to have a platform that allows her access. But just the free access to the single trade hub of Ecobank, she is open to all the other possible customers in our 33 countries in which we operate. So for me, it's about everybody doing whatever little initiative they can at their level and not waiting for a big initiative, because we are all in our communities. We all have a part to play in our communities. Yes, the governments have a part, but the financial institutions have a part, but we as individuals see the need, we have the access, and we should be able to come out with solutions. And I believe also the partnerships with fintechs is key. We have fintechs in the hall, and I think in the morning we're talking about that importance of fintech. Why do I say that? If you look at what is hindering financial inclusion, which is a big part, the statistics for women also being excluded from the financial ecosystem, is access, internet access, and access to data. So, but when you look at the statistic, it shows that in sub-Saharan Africa, less than 40% of adults have bank accounts. But if you look at the mobile money wallets, you have over 65% of adults that have mobile money wallets. So that means that through a partnership with the fintechs or the mobile operators, we can also gain scale because we can offer microloans You know, and at Ecobank, we also did that in partnership with Jomo. And I think in the presentation we saw earlier, they also mentioned that partnership to be able to give microcredits. So I believe all of us have a part to play. We have a role to play, and we have to be part of that ecosystem or value chain that is going to work together to be able to reach the scale that we want to get to include women in the financial ecosystem and therefore grow the economies in Africa.
You know, I think I want to pick up on the point. We've been talking a little more high level, and I want to pick up on your point on data. Ilham, we were talking previously about how there is a big data gap. So even as these different products, different programs are being put in place, for an insurer to create a product, for an insurer to act as an investor, you need the data to do the work. How do you see that gap being filled?
Thank you for the question, and it's a real issue that we have today. We don't have enough data. For in insurance companies, we don't have enough data about products, how they are used by women. We don't enough data to see the impact of any actions that we want to deploy for women. We don't have it, so it's very difficult. We came with some solutions that we think that are good, but we are not sure that they are good. We have to make analysis on the impact to know it. And I believe that is not only a problem on the insurance side, but it's a global problem. Today, when we are talking about gender bonds, we have seen the numbers that Zineb shows to us. We are talking about 170 gender bonds all around the world, just 5 in Africa. It is not significant. It's not significant at all. And I think that we have a lot of things to understand from this. I think that we have a problem of awareness regarding the issuer, regarding the people who can benefit from it, from women. We have a problem of awareness from governments, of banks, insurance. Everyone is not aware about it. We have a problem also about designing the best solution to get the target. And of course, if we don't have the data, we cannot get the right thing. And even we get the right thing, because we have not assessed the result of the action, we cannot adjust, we cannot continue, etc. So it is really a very, very important part, data. As an insurer, I cannot design the product, and I cannot give the right price because I don't have data. So it's a real issue that we have and that we have to address.
I want to bring you in here, Nathalie, because you guys are, you know, the IFC is the key stakeholder here. You brought up data earlier. How do you collect more data? How do you create systems that are focused on building databases that can then facilitate, whether it's kind of educating investors, whether it's changing the narrative, whether it's creating insurance products?
So collection of data obviously is a key part of our work. So at the World Bank, first, will work with governments to ensure that support them and build their capacity in terms of the aggregation of data. We have also initiatives like the Wi-Fi Code Initiative, where a number of financial institutions, over 100 I think today, are making some commitment in terms of advancing gender. It starts by disaggregation of their data also. So every time we engage with a financial institution through our Banking on Women program, for example, last year, one of every $5 invested into financial institution was earmarked to women entrepreneurs. They have to disaggregate their data. So really at all levels, at government level, at the regulatory level, but also at the firm level, we try to put the agenda of collection of data.
Hadiza, at your multiple gender desks, as you think about programs that facilitate and they're doing capacity building, how do you think about data and what happens with the data that I'm sure is collected at some level? What do you do with it to kind of move the program forward or progress the people who are, or the entrepreneurs that are part of those programs?
So we typically use it internally, and this is really why I think we're not making a lot of progress globally or across Africa. So we use it internally. We would use it working with the DFIs if we had something we're working on. But until we get to the stage where everybody has access to the data, Ecobank, etc., and we have access to their data, I think we won't make a lot of progress. So it has to really be, like everybody has said, a concerted effort. All of us should make a real effort to collect the data, share the data, and then work with the data to come up with solutions that work.
Just want to go back to you, Nathalie, on this. With the data, what kind of metrics need to be put in place? What kind of metrics, benchmarks do you need to be set up as even if there's a commercial institution or a commercial investor that wants to look at this? What do you think needs to be set up so you collect data, that specific data, to measure and performance and so on?
So I think I will answer that looking at how the private sector can advance women economic participation and what are the key functions of the private sector. I will look at it in terms of hiring, benchmark. First, it's about a diversified workforce. So how many women are you recruiting in your enterprise will be the first data that I would want to collect. The second will be around buying practices, your supply chain. How your supply chain are diversified. So what are the data that you can collect around the diversification of your supply chain? How many women-led MSMEs are you buying from? And the third data will be around the access, especially when it comes to access to essential services, financial services. What is your level of how many women have access to your service? But also digital, becoming so critical when you think about the future of work or the future of economy. How many women have access to your digital service for telecom company? There is today 2X that seems to be one of the, who is today actually one of the leading platform in terms of collecting data when it comes to gender. But to your point, we need much more. And those data needs to be really spread across and shared in the market. So we are also launching at IFC a data hub in terms of gender in the private sector. We are at the beginning of this work. And we want to really aggregate data across different platforms, but also even with the academia, etc., and really try to build something for the private sector, because without this, I mean, financial institution can't design the product.
Yeah, I mean, I think this is, it was interesting that you make the point on the data hub, because again, that also helps give investors who are typically very financially minded, very metric-oriented, results-oriented, they can go look at the data themselves. And that gives them the kind of groundwork to do, to invest in these products and therefore scale. Gwen, you made the point about everyone needs to do their bit, right? Everyone does their bit, everyone collects their data, sets up programs, doesn't wait for some regulator or some policy to come in. How does that go up though? How do you see that aggregating at a level that there is then impact? And that there is more awareness, to your point on narrative building?
Thank you. I think Nathalie set the stage in terms of, she made the comment about needing to aggregate the collection of data. And I want to use that just to elaborate one point that is hindering all of us, particularly in Africa. If you notice, we don't have credit bureaus. And this is something that is very critical. What do I mean by that? If I want to lend to an individual, unlike in developed countries where people have credit scoring, where a bank officer can go put in my details and have a credit score based on my credit history. We don't have that formalized platform anywhere in sub-Saharan Africa, particularly the countries in which we operate. So you only have the data from the history that the customer has had with you, which limits you. Secondly, we are all collecting data individually, but we are not collating it. So if we have dispersed data all over the place, it does not help us to be able to fine-tune the needs and the services that an individual will want or individuals will want. That will help us to tailor-make solutions and products to fit the purpose. So I believe that data is very key because data is very key, but we need to be able to bring that data into a unified platform that is accessible to everyone. If you notice, for those of you, I mean, most of you in the room travel out of the country. When you go out of the country, you're making a payment on a POS. There's no bank's name on that POS. It's not Societe Generale or Bank of America or what, it's just a POS because they are on a unified platform. But in our countries, when you go to a supermarket or you want to make, you see 5 POS. So it means that we are all putting out energy to collect the same data. Imagine if we had one unified platform and each time whoever it is uses the platform, we have the data, we collect the data, and it will help us to analyze more. And I'm giving that base to be able to land with your question. As we are all doing our collective efforts to close the financial inclusion gap, to close the gender financing gap for women, it will get to a consolidated level because if the government is participating, the civil society is participating, the DFIs, development agencies are participating, the financial sector is participating, and we continue to have initiatives in communities because there are community initiatives where you have, like in parts of sub-Saharan Africa, what we call njangis or tontins, where it's people putting money together to lend to women who don't have access to the financial inclusion. If we bring them in and then work with the fintechs, as I mentioned, and the mobile operators, you will see that that collective effort that might look small and fragmented right now, when it is consolidated, it will reach the scale that would get national recognition, I'll put it like that. And with the communication and marketing efforts that we have to make to communicate around it, I believe that will reach the scale that we are all hoping to get to.
Thank you so much. That's a fantastic way to end the panel. We were talking before the panel that we thought that 1 hour might be quite long to discuss this, but looks like we're well over time. I'm being told to shut this down. So thank you so much. What a fantastic panel, and thank you all for your insights.